What's up, guys? This is Rey-Jay back with another video, and in this one I want to break down what's happening with the overall market and talk about what forecasters are telling us about the future as we're seeing some new developments on these charts. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. So looking at the market right now, we saw this massive rally in the last couple of days, which is exactly what we were talking about in my videos from last week. I also called the bottom near 650, and that's what happened so far. And if you don't believe me, guys, let me prove it to you guys. So this is my video from last week where I talked about Forecaster. I mentioned that a massive buying opportunity is coming. I said that we're going to likely get a buying opportunity and that I would start dollar cost averaging at the current levels looking at our setups. And on top of this, when you look at Forecaster, it was basically telling us that at that time, the market could see somewhat of a pullback before we get some kind of like really nice bounce 3 months out. And it's continuing to tell us that there is a buying opportunity. So that's what we're essentially hearing from Forecaster, at least thus far. And on top of this, as the market has been essentially selling off, right, we are not necessarily perma bears. We're looking at this as nothing more than a buying opportunity. Other stocks such as Meta, it was basically telling us that Meta was due for a bounce as well. It's another example. I'm going to show you guys what's happening with Meta as well once I break this down. So let's talk about this. What happened? Well, like I said last week, I said that the market was likely going to see some more downside, and this is where SPY was. Right over here when I was recording my video, SPY was like all the way down here. So you could see SPY was on this big downtrend. Everyone was panicking. People were telling me it's going to crash. Why am I turning bullish? Saying there's going to be some kind of end of the year rally was completely ridiculous. And what happened was we got something very different. So instead of continuing to crash, the market just made almost a full V-shaped recovery in just 3 days. So basically Monday, Tuesday, Wednesday, the market just got bought back up and we're continuing to squeeze to the upside. So I do want to mention that this basically solidifies the notion that the market can squeeze when we see a big shift in sentiment. When people start saying the market's going to crash, it's the end of the world, of course, that is the time for us to be greedy. When everyone is fearful, we like to turn greedy. So what's going on? Why is the market bouncing like this? And will the market continue to squeeze to new all-time highs? Well, two things really affect this market right now. Number one, the data that comes out involving employment and inflation. That involves the Fed's dual mandate, which will be affecting how our overall companies are valued, and also if we see more liquidity entering the markets. Secondly, it depends on the Federal Reserve, okay? Looking at the Fed right now, there is a wave of optimism from different Fed speakers, such as Myron, Daly, Waller, and many others, who are telling us we're going to most likely get a cut by the Fed, meaning that there's an 85% chance we get a cut by the Fed. Looking at the current data, we're most likely going to be getting some kind of cut for the month of December. And also, the Fed is buying back treasuries, which tells us that there is more liquidity entering the systems. This, in turn, is helping the market push. And with the market pricing this in, there's a lot of optimism about how the Fed is going to transition away from quantitative tightening and enter a phase of quantitative easing, right? By lowering interest rates and by continuing to buy back treasuries. This will indirectly pump in more liquidity into our systems, boost different sectors, and help the stock market rally if this does truly continue. And that could be a very bullish factor for the end of the year. Now, there is one thing that I do want to talk about, though. I don't think that we just go up in a straight line, because there is a possibility that SPY is forming a left shoulder, a head, and maybe even a right shoulder. And then if we do get some kind of pullback like this, whether we dip back down towards this low right here in the 660s, or if we make new lows, like I said before, my view has not changed. I see this as nothing more than a buying opportunity, because this also aligns with our very key fib retracement area right here. So if we do reject near 685, we're looking at a retest of the golden pocket, which aligns with the inverse head and shoulders, and then we could be looking for a nice bounce. So either way, if we do get some kind of pullback here, I think it's going to be nothing more than a buying opportunity. Forecaster was telling us that there would be a really nice bounce coming to the markets, and lo and behold, we got a bounce so far. So it's not necessarily outlandish or crazy to think the market could break all-time highs, because when you look at the charts, we're just pushing like crazy. We could push really fast if the market gets the right catalysts and if the Fed starts to bring in more liquidity. So what's Forecaster telling us now? So we talked about how when the market was dumping, Forecaster was telling us, no, do not turn into a perma bear. We're going to be bullish. We're going to be buying the dips when everyone is selling and panicking. We're going to buy, buy, buy. And lo and behold, the market got the nice bounce we were looking for. That's what happened so far. And right now, at 3 months out for the SPY chart, the projection is strong. We're bullish. Now, it's telling us from this level, we could pull back another 1.5% or even more than that. As much as like 6% if it's really, really extreme. We could see another pullback move. SPY could drop another like 1 to 4% depending on our levels. So we could still pivot a bit on SPY if we get some kind of rejection between here and 685. But if we get another dip and if we end up returning to the 660s or even a little bit below that, we're going to likely see another very nice bounce, and we're going to likely try to rally back up towards the all-time highs. We're going to likely make new all-time highs to finish off the year based off our current setups. That is what the SPY chart suggests for us. All right, so overall, Forecaster is very consistent. It's been telling us the same thing. The trade is more bullish, and overall, we're doing a good job at holding up. On top of this, we didn't really get any major sell ratings. We're still holding up nicely. We're still kind of like neutral. The market has remained stable because we didn't really get a massive sell-off or a crash. Dropping 5% is nothing, right? It's nothing. You need to drop 20% to enter a bear market. We're not even close to that. So all the panic right now is just people being very, very scared, people listening to the mainstream media. And that's basically not really telling us the truth, in my opinion, because they want us to be scared. They want everyone to start selling down here. People were selling down here. I said to buy down here, and we got this nice bounce. Now, what about the triple Q? Well, we have a very similar setup. This also resembles kind of like an inverse head and shoulders. If this is like our left shoulder, this could be our head. We're going to see if we rally a bit more and then form like a right shoulder or not. I'm not sure if we get a bigger rally before we form a right shoulder, but if we do get some kind of pullback move, this will be nothing more than a buying opportunity in case SPY returns to the 590s. I see the same thing as well. Why do I say that? Because when we look at Forecaster, it's essentially telling us the same thing. Let's go to our projections right here, and you will see that if we go a 1 month out, we're going to look at the 1 month time frame. The projection is still very, very strong, meaning that we could dip a bit according to this. We could dip as much as 2.6% or even as much as 6%. Typically, we like to be in the middle. So even if we dip 2 to 4%, that will be nothing more than a buying opportunity because we could easily return towards all-time highs by the end of the year, according to this projection. This is based off the previous data and previous patterns that tell us what the chart has done given the price action on the chart. So that's something very, very interesting. We're still seeing the same thing being told. We're not necessarily oversold or overbought. We're just neutral for now on the triple Q, and we remain very, very consistent in my personal opinion. So for now, even if the QQQ gets a big rejection, if we do turn here and form like our right shoulder, this will be nothing more than a buying opportunity. And I would not think it's a bad idea to slowly dollar cost average, right? We had the time to buy the dips as the market was dipping. I kept on telling everyone we're going to likely get a big bounce for the end of the year. We bounced so far, so we'll see if we get another pullback before we continue to squeeze towards all-time highs. Now, another stock we were talking about in my previous video, I'm going to actually go back to it, was Meta. Forecaster was telling us Meta had a very moderate projection that it could dip a bit, but at the levels we were looking at, we would likely see some kind of monstrous bounce coming very soon. That's what this told us about Meta. If we go to Meta, look what happened to Meta. Last week, okay, let's actually replay this. Last week when I was recording my video, I said that Meta, which was at the time around just under $600 a share, I said this is a nice buying opportunity on Meta. I'm not just saying this based off what I see on the chart, but it's also because of Forecaster. Forecaster has a moderate rating for Meta. And when you look at the overbought and oversold indicator, you will see that this was giving us a buy rating. So something very cool about Forecaster is that when stocks drop really hard, if you want to see, is it smart to buy a stock? Should you be selling a stock? It's been working very well for Meta. We got a very, very strong sell rating up here on Meta when this thing was in the 730s back in February. Then it dumped and slowly we're getting buy ratings on Meta. This was the opportunity to dollar cost average. Then if you had been buying down here in like the 600s and 500s, even the 480s, you would have been able to ride this all the way up towards $800 a share, basically doubling your investment. And then as time went on, this got a massive rejection after earnings happened very fast. I don't think we caught a sell rating at that time since it dropped so fast, but now we're getting buy ratings. It's telling us this is the opportunity to start buying. Even if we dip a bit more, this would be another buying opportunity. So starting a position to dollar cost average would not be a bad move. Why is it? Why is it that Meta is a good stock to buy? Well, we have a new update from Forecast that tells us a good summary about a stock. So on Meta, for example, we click on where it says what's happening. You could see that Meta has awesome revenue. They're up 25.6% when it comes to their ad revenue growth. You could see very good things about the company and their stock performances. And it does tell you this in a very unbiased manner. Of course, there's a lot of scrutiny from European regulators and also from the tax regulators. You can see that there's a lot of challenges ahead that it does deal with. But overall, it's in a very good period of growth and recovery in the stock performance according to Forecaster, and it has very strong ad revenue and strategic investments. That is some great news so far. Despite some regulatory challenges, they're still doing very well. If you want to learn more about the business, you can click on here and it's going to give you a very good summary about what the business is doing. If you wanted to learn about businesses and look for more companies to invest in, this would be very useful. Not just that, you could also look at the fundamentals and you could see the real balance sheets. You look at the raw data, you could see what happens on a quarterly basis with their earnings. As you could tell, they tend to beat earnings the large majority of the time. They beat. They did see a bit of a loss in growth because of the taxes they have to pay in Brazil. But other than that, they basically smash earnings all the time. And this is a very good company to buy based off fundamentals. It has a good backing and it's doing very well in my opinion. So overall, it's a great company, strong fundamentals. It's holding up very nicely. And you could look at all the data right here, the income statements, the balance sheets, and everything like that, all just like that. It's very useful for long-term investing. And overall, you could see that it's more neutral. It used to be oversold. Now it's more neutral, and we're getting a nice buy rating. I'm going to go over just a couple more tickers to conclude this video, but basically Forecaster was telling us last week to buy at these low levels below 600. What happened? When I go to the real charts, if you had bought at $600 when I was talking about this chart in my video yesterday, you would be up immensely. We're actually at $633 a share right now, and we are trying to climb higher. So I'm going to see if Meta turns down. Actually, it's possible that this is forming a giant left shoulder ahead, and then this is about to form a right shoulder, and then we could be looking for a big bounce, but I think this easily runs back up towards the 700s by next year, and buying in the 600s would be a very good opportunity, or even below that in case we get some kind of pullback. But overall, Meta is a good chart to buy, a good stock to buy based off its fundamental backing and such. And a good way to really understand that would be by using Forecast to look at the indicators and look at the summary of the business. I think that's a very awesome tool that we could use Forecaster for, right? You could also look at future expectations. Once again, it's known for being very profitable, and we're looking for good margins. And overall, you could see what we're forecasting so far when it comes to future prospects. Now, let's look at just two more tickers before I concluded this video. For Tesla, for example, I like the setup, but my only concern is that there is this gap down here at 393, and overall, it's doing a good job at holding up. I mentioned that I was going to start dollar cost averaging at 380 on Tesla, and in case it dipped lower, I'd be buying more. We actually got a monstrous bounce from the exact level I said I'd be buying from, because in my video where I talked about Tesla, you could see that we basically got a nice bounce on the share price, and there's a lot of upside potential for this to run closer to $500. Now, it could pull back according to Forecaster. A 5% pullback is possible, or even as much as like 20% of things are very bearish, but that is not as probable. The more probable move would be that if we get a 5% pullback, it's going to be a buying opportunity for a massive squeeze to finish off this year. And that's based off what we're seeing in the correlated past events. So far, we're trying to bounce on Tesla. We'll see if the bounce continues. You could click on here and see what's happening, at least to the share price. You could see a lot of different things if you're interested in learning about what Elon Musk and the team are doing and what their numbers look like. That's something else that's really important for anyone that's interested. And then you could also look at other cool tools such as, the fundamentals. You can see the average fair value is at $308 a share. Tesla is well above that, which tells us that the current levels are not ideal for buying. We had a better buying opportunity at 380, which is where I start to dollar cost average. So if we do get another pullback off this rising wedge, I will be looking to dollar cost average slowly. And in case we get a big dip, that could be another buying opportunity. And I do think there is a risk of that looking at the setup with the rising wedge and the gap below. So that's my view of Tesla. And then for stocks like Nvidia, unfortunately for Nvidia, when earnings came out, we bounced and got a massive rejection, and we're still on a big downtrend. Forecasters telling us that Nvidia does have some downside risk. It could drop another 3 to 5%. It could even drop more. But overall, there will be a big bounce coming to finish off the year, most likely. So there will be another buying opportunity most likely coming. Now, what's happening with Nvidia? As you guys know, it's a great company, awesome fundamentals, great growth. They basically destroyed earnings, beating pretty much everything. And they're seeing lots of growth for their GPUs. That's awesome for Nvidia. However, if you want to look at more details about what the stock is doing, we know that it's doing well fundamentally. We know that it has good expectations. But if you want to look at other specific things such as investor sentiment, you could actually use a forecaster for that. What are the bulls saying about the stock? What do the bears say? You could see a very, very unbiased analysis of the stock. And I think that's very, very cool. So if you want to see what would the bears say, what would the bulls say, what are people saying, if you want to look at things from a very unbiased perspective, there are different ways to kind of look at things. The bears would argue that we're kind of like in a bubble and that we are due for a correction. You could argue that, right? But as of right now, it looks like we're not in a massive corrective stage yet. We're just seeing a healthy pullback on Nvidia before we get a massive bounce, most likely. So, forecaster tells us that it's possible Nvidia continues to downtrend. We have not broken 185 to break out yet, and we're making lower highs and lower lows. So, this could continue to fall towards the lower 170s or even below that. Also, this sort of resembles a left shoulder, head, and maybe like a right shoulder. And if we do fall a bit more, this would be another like buying opportunity for a nice bounce to kind of like close off the year. A move like this could be coming to Nvidia as we kind of consolidate and dip a bit more, but overall, it's going to be a buying opportunity. So, what is happening to the stock market? The answer is, overall, we could be forming a giant inverse head and shoulders like pattern on spine. We could pull back again, but these pullbacks are buying opportunities. I've been saying that countless times when I look at SPY, the QQQ, and the others. I think that these are buying opportunities, and that in case we do get another pullback, it's going to be another buying chance for people out there that are interested. If you don't believe me when I say this, I already showed you guys proof by showing my previous video where I said I'm buying up SPY around the 650s, and I was expecting some kind of bounce to start soon based off what forecaster was telling us from last week. And lo and behold, we got a bounce so far, which tells us that the market could make a full recovery and rally like crazy to finish off the year. Now, if we get a pullback from here, if we get a small pullback to form our right shoulder, I see that as nothing more than a buying opportunity. It's still very possible, and forecaster does suggest it's a possibility. But then to finish off the year, it's going to be nothing more than a buying opportunity, and we're going to likely continue to squeeze to new all-time highs. I would say by late December, if not earlier. And I still think that there is so much potential in this market. So with that being said, I want to thank you all so much for listening. Once again, Forecaster is a very awesome tool. I showed you guys real proof about how these indicators are working. And we have new updates. Instead of just looking at what stocks could likely do in the future, kind of like looking at the data yourself, to look at like what the fundamentals tell you and such by manually doing everything, Forecaster now has a new update where you could basically look at summaries about what's happening with the business, what's happening with the business model, and everything else like that, what consumer sentiment is looking like. If you want to look at like Tesla, for example, you could see everything just like that in case you're interested. So it's very, very awesome for understanding the fundamentals of these different businesses and to give you guys a very, very quick, easy to look at summary based off what we're seeing. So that being said, I want to thank you all so much for listening. Forecasters, amazing to forecast what the stock market will likely do in the future based off high probabilities and based off previous charts and patterns. And I think these tools are very intelligent and very useful for long-term investing. I highly recommend using Forecaster for investing, for looking into companies, into looking at like fundamental analysis, and for all kinds of different things that could really assist you guys. So please check out my link down below to sign up. if you're interested to save 10% on your membership. And with that being said, I thank you for listening. Please have an awesome rest of your guys' weekends. Have a very happy Thanksgiving and peace out.